Warm welcome to all of you. This is A K Asnani from Smart VRC, and today's topic is market beat. So in this webinar, we are going to cover broadly 4 parts. There will be 4 parts. First is IRCTC. Second is avoid these 2 category stocks. Third is 5 steps to success. And last but not the least, question answer session. So first is IRCTC, or we all know what has happened with IRCTC. Those who have not purchased the share, they also know that there was a sharp reaction in the share price of IRCTC. So this is the share price movement since 14th of October 2019. That means about 5 months, 4 to 5 months pre-COVID period. And as you can see, share price moved up from about 650 rupees or maybe 700 rupees to almost touching 2000 in January, February 2020. That means just before the COVID. Then on 23rd of March, it came down, crashing to more than 50% down, and it went down up to 900 rupees. And since then, it recovered along with the market, and it was moving steadily. It was during the last 3-4 months, as you can see, the fancy gathered the stock, and it went up almost to 6,000 rupees, and then within 2-3 days, it fell to about 4,600 rupees. So the first query is, poll rather I should say, it's not a query, or why IRCTC share fell sharply. First is due to F&O positions, second is overvaluations, third is retail investors panic, and the last one is news from the company. So I am sure you must be able to see on your screen. There are few options, 4 options, sorry. First is due to F&O position, second is due to overvaluation, and third is due to retail investors panic, and fourth is news from the company. So 55% of the participants have participated in this poll. I request all of you to participate. We are not going to share this data with any party. Even we are not going to ask you anything. So be open and be honest. So within next 5 seconds, this poll will be closed. All right. So this is the answer. These are the answers you have opted. 15% said due to F&O positions, 65% said due to overvaluations, and 13% retail investors panicked, and the last one, news from the company. So there is nothing like this is a right answer or that is a wrong answer, but broadly, yes, we can come to certain type of guesses so that we can be very careful with such type of stocks in our portfolio. Thank you for participating. Let's move ahead. So this is the share price of IRCTC from 18th of October 2021, yes, this month, to 22nd of October 2021. So in a gap of, in a period of 4 days, 18, 19, 20, 21, and 22, of course, 5. ITC stock fell by 21%. And what happened during this time, as far as the index is concerned, index fell by 1.5%. So IRCTC stock fell by 21.4% and index fell by only 1.5%. Now, those who are holding this share or those who purchase this share, there can be varying losses. Varying losses in a sense, if you are holding, say, if you have a weightage of only 5%, then the impact of the share price of IRCTC in your portfolio would be hardly 1%. If you are holding 10% weightage, then the total impact on portfolio would be 2%. If you have got leveraged position, that means if you have taken a loan or if you have invested through the derivatives, say 5 times, then you have lost your total principal, because there is a loss in share price of 21.4%. If you have leveraged your position by 5 times, then you are gone. You have not only lost the principal, but you will have to pay from your pocket additional 5%. So that is the risk involved with such stocks. We should be very careful. Now, what retail investors are doing in this stock? As of 30th of June 2020, their stake, retail investors' stake in the company of IRCTC was 8.84%. And as of 30th of September 2021, that is this year, their stake is 14.17. Now, that is almost 70% up, 70 to 80% up, and that is significantly up. Normally, what happens when the share price starts moving up, retail investors exit, and the smarter investors, that is the mutual funds, SNIs, and foreign portfolio investors, they enter. That is known as the smart money. And retail investors' money is the dump money, right? So there is a normal trend. But this time, in case of IRCTC, as you can see, the retail investors have taken the lead, and I'm very sure because retail investors with a capital up to less than 2 lakhs, there's a data of those investors. If they have increased their weightage in the company by 80%, that means the big institutions must have definitely sold, because the government stake is intact. That is about 67%. So retail investors think that they are very smart and they have led the rally. Probably there can be many reasons behind that, many logics have been applied, but we must also understand that what has happened during this period. Has anything special happened in IRCTC? So these are the revenues for 2020 and 2021. This is the income statement for the year 2020. So except for the last 15-20 days, for the rest of the FY20, those were normal days for IRCTC. And in those normal days, the EPS was 33.04. Now in 2021, the EPS fell sharply to 11.87. So this cannot be seen as a reference. For us, the reference is 33.04. With an EPS of 33.04, stock at a current price of 4,500 rupees. So that you can very well imagine the P ratio of about 140 to 150. It is by any yardstick too high. Can IRCTC share price, this EPS grow upward of 50% or 60% per annum? Is there a probability? If you think that yes, then only when these high valuations can be justified only to a certain extent. Otherwise, if you ask me, then I will apply a PEG ratio of not more than 2. And with a PEG ratio of 2, the company should grow at the rate of at least 80% every year. When I say company, means company EPS. EPS should grow at the rate of at least 80% every year. Then only I would justify the investment in this stock. That is my personal opinion. And this is to inform you, we have never recommended IRCTC in any of our services till date. Neither I have invested. This is just from the educational point of view, just from the information point of view, just from the understanding. Now, this is the 30th of June 2021 quarter results. So why I am showing you this is to see if there is any significant. Here the EPS was 5.16, so annualized EPS is about 21. That is also way below than 2020. So as far as the results are concerned, nothing is visible. So this was all about ITC, and I showed you IRCTC, and I tried to show you what to be seen and how much growth should justify the P ratio. Now there is a second poll, and this is also very interesting. During last 4 days, when IRCTC share price is down by 21% and market is down by 1.5%, your portfolio is down by how much? Option number A is 0 to 1%, option 2 is 1 to 4%, and option C is more than 4%. So the window will remain, poll window will remain open for about 15 seconds. %, 68% have participated. I request all of you to please participate. There is nothing right or nothing wrong. It is only interesting to see the interpretation. So that is a good number. 77%, 78% participants have participated. Thank you very much. I'm closing this poll. And here are the results. So 52% said between 1 to 4%, and 36% more than 4%. So almost more than half of the investors have lost more than the BSE Sensex, that is 1.5%. Even 36% have lost more than 4%. That is a very honest declaration, honest poll, I should say, because many stocks have fallen substantially during this time. Of course, that is not visible through the index, but in our portfolio, many stocks have fallen by 3%, 4%, 5%, or even 10%. And that is why the total impact on portfolio is pretty severe. So the learning is why our portfolio is down more than the Sensex. If it is down by 2% or 2.5%, then it's okay, because we are always forward looking. If you want to perform better than the Sensex, definitely your beta should be more than the Sensex, but not to that high that if the Sensex falls by 1.5%, our portfolio falls by more than 4%. So IRCTC is just an example. I am very sure we all must have some stocks which are fundamentally overpriced as much as IRCTC. It is quite possible. So look for each and every stock in your portfolio. Still, there is a loss of only 2.5% or 4% in your portfolio. So this is a good time, and this is a good learning for all of us to find IRCTC kind of stocks in our portfolio. So that was all about IRCTC in brief. Nothing, I'm not suggesting anything. There is not a, this all analysis should not be construed as a advice to buy or sell IRCTC. It is your opinion. You must have certain logics. You must have conviction or confidence in the stock. Maybe not yours, maybe your advisors. So better to take advice of your advisor what to be done. So next is avoid these two category stocks. So normally what happens is the stocks with poor fundamentals, poor story, and high valuations, these are generally the stocks which crash the most. And these are the great losers. So there must be many new participants in this webinar. For them, I would like to clarify that Fundamentals means the past, and story means the future. Fundamentals will give a support to your share price, while story will pull it up. So we should look for good story and attractive valuations. Most of the time, what happens? Retail investors, they invest in stocks with poor fundamentals. These stocks don't have much story, means the genuine story, and these are at high valuations. So normally this is the case. But this time what is happening is there are companies with strong fundamentals, average story, and very high valuations. So this is the second category of stock which can create a huge loss in your portfolio. There has to be a certain limit to provide high valuations to a quality stocks or to a high growth stock. As I said, a PEG to growth ratio of 2 is a limit, or maybe 2.25 at the most you can stretch. Beyond 2.25, it is not justified. Here I would like to give you an example, and this goes back about 11 and a half years back. We will consider two dates. One is 18th of February 2000 and 20th of April 2001. This is the time of .com crash. This was the time जब लोग बोलते थे कि भाई Infosys डिटॉल साबुन भी देगा क्या नहाने के लिए. there was a saying that you will have to only click certain numbers on your mobile, and Dettol soap will come to your home. Yes, this is a story of year 2000. It took a long time. Of course, now it is happening, but that is how the story builds up. That is how the bubbles build up. So let's see what happened during this period. It is a period of about 13 to 14 months. So first is BSE Sensex. What happened to BSE Sensex? Sensex fell by 37%. That is pretty good fall considering the period of only 14 months. Now, what happened to the stocks like Infosys? Infosys was down by 61%. Those who have joined post year 2001 or 2002, they must be surprised to see that Sensex fell by only 37% and Infosys fell by 61%, 80% more. That is phenomenal, 70 to 80% more. And then Wipro, 85% from 8,900 to rupees 1385. Can you ever imagine a stock like Wipro, so sound fundamentals, then why it fell by 85%? And there is more. HCL Technologies, 86% from 2,798 to just 384 rupees. One could have never imagined that this can be the fate of so-called solid stocks. Yes, they were solid stocks. Solid means strong fundamentals. But whatever growth rates people were assuming, investors were assuming, were way too high to be sustainable. We should consider always sustainable growth rates. That is the reason why these stocks like Infosys, Wipro, HCL Technologies, they fell like anything. And this is the second category stock which I was discussing in the previous slide. That is, avoid these two category stocks. I'm not saying that you have to avoid presently Infosys, Wipro, or HCL Technologies. What I'm saying is beware of high P ratios. These are all very, very high P ratio stocks. And as I said, the assumed growth rates were too high to be true. I will give you one more very excellent example with the same stocks. Yes, the same stocks, and very recent example. And this is for only 2.5 months. I think not 2.5 months, only 2 months and 6 days pre-COVID and at the peak of COVID. When I say the peak of COVID means the peak, not I should say the peak, but the bottom of the Sensex and Nifty. That was made on 23rd of March 2020. And 17th of January 2020, that is last year in January, on 17th, Sensex was 41,945. And on 23rd March, it was 25,880. That is a fall of 38%. Almost same what has happened 11 years ago. 37% fall was there, and today, this time it was 38%. What happened to Infosys? Only 31% down. Wipro, 32% down. HCL Technologies, 31% down. Now you compare these two changes. Sensex fall is same. What has changed is the valuations. This time, valuations were not that high, and that is why they were able to sustain. Not able to sustain, I should say, but with respect to the BSE Sensex, yes, they performed little better than the index. Nothing has changed. Infosys, Wipro, HCL Technology, all fundamentals were as strong as in 2001 or in 2000, but it is the future projections. It is the valuations what the investors consider. Now you will also appreciate one more thing here. The markets are same, but it is the valuations which made the difference. Now, coming to a couple of products from the house of Smart VRC. The first in line is Smart Gains. So this is the story since the period of 18th of March 2020 to till date. The best advisors, the top performers, I mentioned here only, and this is how they are very simple stories. Not much thought process was required at the time of the COVID. Now it is required, but at the time of COVID, you have to keep very simple things in mind. Like in Cosmo Films, the raw material is from crude oil. Crude oil was touched negative. Yes, at that time it was negative. So huge benefit to companies, flexible packaging companies like Cosmo Films, Polyplex, Uflex. We recommended all these three, and investors made huge money. At the current price, it is 6.1x. So Infosys, Relaxo, Poshak, Tata Elxsi, Mindtree, Shivalik Bimetal, these have given huge returns to investors. And the second part of the Smart Gains is Smart Billionaire Picks. That is a pick basket of picks, which was started with 1 lakh rupees on 30th of May 2001, and today it has reached to 1.37 crores. So this is the data, and BSE Sensex is up by 134%, while Smart Billionaire Picks is up by 226%. This is for 23rd of March. That is from this period, this highlighted period. Overall, if you go, you can see that the 1 lakh has turned into 1.4 crores, almost 1.4 crores. And during the same period, BSE Sensex has increased to about 17 lakhs. There is the difference. Coming to Smart Multibagger, this is our second product. The previous product is a weekly, and the subscription price is 5,900 rupees, including GST. And the second one is Smart Multibagger. In a year, we provide about 12 to 15 advisors. There is no fixed date. And here again, you can see the number of multibaggers we have recommended within a short duration of less than 1 year also, like Tata Elxsi has given 2.6x returns. This was recommended at rupees 2,300. And recently, company has declared fantastic results. Net profit is up by 58% on year-on-year basis. And it is not only 58%, one should not consider that it was a COVID period, because in IT stocks, the base was already very high. And on that base, if you're reporting 58% increase in net profit, that is phenomenal. And the subscription price for Smart Multibagger is 9,440. Now coming to Smart Freedom Stocks, again, it is a basket. And this is the performance. It has grown from 10 lakhs to about 26.84 lakhs within a period of about 6 years. And here the changes are made once in about 25 to 30 days. Again, there is no fixed date, and subscription price is 7,670. And again, including GST. Then we are coming to Smart SIP. which may look not to be very attractive, because we started on 5th of October 2016, and after 5 years, it has grown from 6.1 lakhs to 11.29 lakhs. But those who know how to measure the performance of SIP, they will appreciate that internal rate of return here is 26%. 26% is way too high. One should appreciate that we have not invested the whole money in one go. We have invested every month 10,000 rupees. This is just a figure to make the calculations at our end. You can make your own. You can decide your own investment every month. And the subscription price is one of the lowest among our products. It is only 3,540 for 1 year. All the subscription prices are for 1 year. And one more thing, for all our advisory product services, we provide you advice for buy as well as for sell. So the whole system works in a closed loop fashion. It is not that we will give you only a buy advice and you have to decide when to sell. And the advice is provided through multiple channels, like through our mobile app notification, through WhatsApp message, and also through email. So this was all about Smart VRC. There are other things also which can be useful to you, like Smart Insights Pro videos. These are small videos and very useful for learning, not only for learning, but we have also shared our wisdom. And similarly, there is a book authored by myself, A Way to Billionaire. This you can purchase from our website, that is smartvrc.com. And also we have calculators which are freely available to all of you to calculate the amount you require at the time of retirement and the amount you need to invest at what rate of return so as to achieve a happy financial freedom. Not only at the time of retirement, but even pre-retirement, you can use it. So coming back to our webinar. Now 5 steps to success. What are these 5 steps? First is always think long term. Always don't think short term. If you think long term, many things will change automatically. For example, today there is a lot of inflation. You must have heard that the top management from Hindustan Unilever is also concerned about the inflation, and the Asian Paints has took a strong beating because of beating in terms of the net profit reported because of the rising oil, and rising oil makes its raw material costly. So think long term. Today there is a problem as far as the semiconductor chips are concerned. Maybe after 1 year, after 2 years, after 3 years, there will not be such problem. Think that way. Your total thinking process will change. Keep only positive stories. Don't see the dreams like if the company is in trouble, maybe today is in trouble, after 2 years, 3 years, it will come out of trouble and came 5 times or 6 times. That is very difficult. I have seen only limited 3 permanent turnarounds during my investment career of 31 years. 3 permanent turnarounds. It is very difficult to make a permanent turnaround. So be very selective and always bet on positive stories. Pay attention to your valuations. At what valuation? XYZ is a very good stock. It has a very strong management and one should buy. At what price? After all, there should be something we should consider. At what price? At what valuations? At what P ratio? At what growth rate? And moreover, we should also concentrate on the weightage. How much weightage we should provide in our portfolio. If the stock is risky, but there is a chance of multi-bagger returns, then have a low weightage. Because anyway, if there is a potential for 10 bagger in 5 years, then that will have a substantial impact on your portfolio, even with 3% weightage in your portfolio. And as I said, the stock is risky, so why to take a risk, higher risk? So have control on your greed. And always be rational. So these were the 4 steps, and the 5th one is, in general, avoid DIY, that is do it yourself. Believe me, not even 1% of investors are successful from long-term perspective. When I say long-term, those who have an experience of more than 20 years. Look around you, look around in your WhatsApp groups, look around in your social media, and let me know how many investors you have in your group who have an experience of more than 20 years, 30 years. Very, very rare. So the message is very clear. It takes a long time in stock market to develop expertise. Try yourself only if you are that much of confident, that much of experience you have. Otherwise, as I said, presently, what are the factors which are hurting the stock market? Number one is stock indices have risen too much in too little time. Yes, when you compare the index level of 26,000 on 23rd of March 2020, that was the bottom of the index at that time. So index is up by about 130%. But if you shift the base to January, that time the index was about 41,000, 42,000, and the index is up by 50%. So it is the base. It is a matter of only 2 months, which changes the figures by so much. Moreover, it is not the index, it is the valuations. It is the valuations of the stocks in your portfolio which decides your portfolio returns. High valuations. Yes, people are concerned that the valuations are very high. There are investors who understand that a P of 100 means what? A P of 100 means it will take 100 years as a businessman to get your money back. That means it will take 100 years to double your money, assuming that there is no growth. 100 years. So even if there is a growth of 30%, 40%, then also it is going to take 20 years, not less than 20 years to double your money. Are you ready? In bank, you will double your money in 15 years. So try to understand what the valuations means. Rising inflation, we have already covered. See, it is very simple. In the pre-COVID times, my hairdresser used to charge 50 rupees for one cutting, for one sitting. And about 7-8 months back, when I visited the same hairdresser, he charged me 100 rupees. So why he charged 100 rupees? So I asked him, so what reason, what pretext he has is, sir, number one thing is our shop was closed for so many months and we also need money to run our homes. Secondly, we are using sanitizer. So we have to compensate for that also. Yes, that is very logical. But that is how the inflation comes into the picture. 50 rupees has, so even if you include the extra accessories they are using, maybe the cost might have increased by rupees 10. So they should have increased from 50 to 60, but now they have increased to 50, from 50 to 100. That is inflation. Everything is in the current pretext, it is happening like this only. There is a strong demand. People want to enjoy their life because they were inside the homes for about almost a year, more than a year, and they want to enjoy. There is a strong demand and supply constraints are there. So that is causing the inflation. So, but that does not mean that we should not invest in the stock market, because there is nothing better than stock market to take care of inflation. Not only inflation, but it gives you very good returns. Coming to the smart word, price is what you pay, value is what you get. It is very simple. हम ऐसे पढ़ते हैं उसको और हमें लगता है हाँ ये तो हमको मालूम है. Just I want to ask you, when you buy a share of any company, had you ever thought whether it is worth or not? What should be the worth? Had you ever asked your advisor, what is the worth? Had you ever asked your broker that you are suggesting such and such stock, what is the worth of that stock? Don't you go to the shopping mall and you buy, suppose you buy a television. So that time, you know very well what is the worth of that television. You are not going to pay 3 lakh rupees for a television worth rupees 50,000. Are you going to pay? No, because you know the worth of that television. Why not in stocks? So that is what this quote means. Always try to find out what is the worth, how much I should pay for this much of worth of a stock. So there is a feedback. This we have shared earlier also, and Mr. Siddharth is a highly qualified, and he's staying in Singapore, and he's associated with us, I think, more than about 14-15 years. And every time he says that I learn something new. Of course, we are very close to 120 webinars, and almost I believe he has attended more than 100. And he says that every time he learns something new, and we whole team of Smart VRC is thankful to not only to Siddharth, but also there are many other participants I know who are attending these webinars very religiously. And yes, we want one favor from you. If you have liked this webinar, if you have liked the contents, if you have liked the thought process, then kindly spread this information to your friends, to your investor friends. And if you want that we should convey the information about this webinar and other important things, about important wisdom sharing is there in our WhatsApp groups. So we can include you in one of our WhatsApp groups to your nearest city. If you can send me your name and your city to this mobile number, this is 9755920780. So with this, we come to the end of this presentation. Now we shall shift to question and answer session. Thank you very much for your patient listening. So if you have any queries, you can use the chat box, or also you can use the reaction button to raise your hand, and I shall ask you one by one. So what is your view on PSU banks? Okay. Regarding the banks, it is the right time to enter into the banking stocks. But as far as the PSU banks are concerned, I would prefer private banks, because these banks are available at attractive valuations, especially when the capex cycle is going to start. In fact, I can say already started. So there are a couple of very good banks available at very attractive valuations. Opinion about IEX, sorry, stock specific queries we don't deal with. I'm really, really sorry. Okay, sir, after Air India disinvestment, are PSU in sweet spot right now? See, for any stock, it is the valuations which matter. It is not that Air India, if Air India is sold for 16,000 crores or 18,000 crores, that means the future is very bright for the other PSUs. You can't say anything. So it is, that is the rationality. Be rational. Don't look at the valuation at which the other PSUs have been sold or other PSUs are being traded. So why not this one? Don't compare. And this is what has happened in case of even IRCTC. Somebody told me that what he has heard why IRCT is rising is they are comparing it with Zomato. If a loss-making company can have so much of market capitalization, why not IRCTC, which is a profit making? Don't make such comparisons. Always compare its own performance with its own valuations, right? Otherwise, when the market falls, the stock with which you are comparing, that will fall, and your stock will also fall. जो आपने स्टॉक को रिकमेंड किया और वो 3x 5x हो गए, तो उसकी पोजीशन आज भी ओपन है. It all depends. In multi-bagger, we provide target of 1x, 2x, 2x, 3x, 4x. But in case of smart gains, no, we are providing target of about 30% annualized. So if it is a 2-year period, then we are targeting about 50 to 60% returns. If it is a 1 year, it is about 25 to 30%. Which sector look promising going forward? So mine is always a bottoms-up approach. First, show me the results, then only I will invest. So it is really, I cannot forecast which sector is going to perform well, but definitely some hint is always there. It may not work every time. Like in the present circumstances, as I said during the presentation, presently there is a shortage of semiconductor chips, but maybe 2 years, 3 years since it will not be. So if you have the patience, if you are looking for long-term investment, you may go for automobile stocks or auto ancillaries also. What is your view on metal sector and commodities related stocks? It is really very dangerous to predict the cycle, and be very careful, as I keep on saying. Of course, steel prices are still ruling very high, but nothing can be said with certainty. So keep their weightages small in your portfolio. I had a doubt about per share book value of a company, and increase in per share book value can be constituted as rise in worth of a company. Book value is only one of the parts. It cannot be directly related with the worth of the stock, because I will tell you in a very simple way. Suppose there is a loss-making company and it has come for the first time into the stock market with a public issue, and it is a loss-making company, and its book value is, say, 0. Face value is 10, book value is 0, and it comes out with an IPO priced at rupees 100 or 110 for the convenience in calculations, 110, and 50% of the equity it dilutes. So what will happen? Its book value will jump from almost 0 to 50. Company has not done anything. Promoters have only diluted their equity. So book value has jumped from 0 to 50. Company has not received any money. How can I say that the worth of the company is increased? I can't say. Okay. Until unless the story changes. So story will change if there is a change of management, if the company gets a huge money at very low rate of interest or something, if a company finds some unique product, something like that, then only the story can change. Yes, Mr. Dinesh Tiwari, kindly unmute yourself.
Good evening, sir.
Yeah, welcome. Good evening.
Sir, I have a few queries which are interrelated. The first one is there are several stocks as per your guidance we have bought at a good price. Now today it is some are at 30% growth, some are 40, some are 50. So, and the Sensex is at say plus 60,000 level. Is there anything like, although you have already answered these queries, but still I'm asking,
yes.
Because greed and temptations are always there.
Yes,
so
yes.
In anticipation, if the stock market drops and we get a good buying opportunity in future. So shall we book some profit? For example, we had invested 1 lakh rupees, and now it has grown to 1.3, 1.4. So shall we sell some 20% stock or 50% stocks? Would in case if the stock fails, drops, stock market BSE get downs, and we get another opportunity like 2020 March to buy more shares at lower price, or there could be still chances that the stock market will not fall and it will grow continuously up to 1 lakh level. As per your last few back, you told that the stock market may cross 1 lakh level also. So nobody can predict, but would it be a good idea to sell some few stocks at good price?
Your last thing first. I said it can cross 1 lakh, but when? That is a very big question. It is Sensex is made up of the 30 companies, and you will also appreciate that it is only the top 6-7 companies which are the highest contributor to the Sensex, which are moving the Sensex, which have made the huge contribution to the movement of the Sensex. See, today Sensex is 60,000, and if it has to cross 1 lakh, then it has to grow by 60%, right? About 60-65%. Traditionally, historically, rather I should say, Sensex has grown at the rate of 15% per annum. So going by that, it should take about 4 years for the Sensex to cross 1 lakh. That is a very straightforward calculation. Honestly speaking, I don't know when Sensex will cross 1 lakh. What I know is about my stocks. So that is what you also need to know. What stocks you are holding and how much confidence you have. If you don't have the confidence, then you should ask your advisor. Sorry, you can ask your advisor as you are asking me. So definitely, everybody is saying that index is high. But believe me, I am very much focused only on the stock I have advised. I am not much bothered about the index. Overall, economy is doing pretty well. It is not that the earnings are not growing, especially in case of IT stocks. You must have observed earnings are growing. Even steel companies have reported very good results. So, but the brick and mortar type of companies, they are feeling the pinch of inflation. That is only for a limited time. Once these raw material issues or raw material, what I should say, there is a kind of a crunch. Partly it is natural, partly it is because of the China also. So once this gets sorted out, I'm very sure the economy will be again on growth path. Why I am this time more confident than the past is during the last couple of years, government has taken some very strong measures, I should say reforms, and which have not shown their impact on the economy for some or the other reason, including the sharp reduction in corporate tax. All those are getting accumulated, added with the PLI schemes, very selected PLI schemes, added with the very low rate of interest, added with, I believe, almost all the corporates which are in the Sensex, they are sitting in very comfortable position as far as the debt is concerned. So there is no reason that they should not report decent growth in earnings. P ratio is, as far as Sensex is concerned, yes, it is high. So be very careful about your stock's P ratio, whether it is justified or not. As you said, you want to book some profit. I will give you an example. Suppose I recommended a stock with a weightage of 4%, and that stock is up by 50%. So the weightage, assuming that the rest of the stocks are at same level, the weightage will increase to 6%. Now, you can sell the additional 2% weightage to bring it back to 4%. That is the best way if you are feeling fearful or if you are feeling that, yes, I should also book some profit. That is the best way. Reduce it back to 4%. That is the thing. Otherwise, if required, we will give you the information, we will give you the notification that, yes, you can book part profits. We did it for Tata Power. We do it very rarely, but we do it. I
Yes, sir.
hope
Thank
I
you very
understand
much.
your queries.
Yes, yes, sir. Surely, sir.
Thank you.
Always.
Thank you.
Thank you, sir. Thank
Mr. Sandeep Soni? Yes, sir.
Hello, good evening, sir.
Good evening.
Sir, one query regarding rallies you recommended and we have exited due to the poor results as per your directions. Similarly, for Laurus Lab, the exit call was given, but there was no reason why we should exit. The stop loss was there, but what is the reason for the fall and why we should exit like that?
Sir, the stocks, what we advise in our various advisory services, normally we don't answer in this session. The previously also, that gentleman, he didn't name the stocks, so I answered it. But don't ask directly with the name of the stocks. Now, since you have asked, so then it's my duty to answer you. Laurus Lab, why we have exited, it is not because of the performance, but because of there is a substantial difference between the index and the stock price. Consistently, stock price is leaving the index. So there is something extra which we may not be knowing. And also there is always a limit. We should put a limit when we say enough is enough. इसके बाद मुझे और loss नहीं चाहिए. So if that comes, then you make an exit. If you can analyze yourself, then you can hold the stock. It is up to you. But it is just our opinion, just to make an exit. And then that was, I think, the third or third stop loss triggered during a period of last 19 months.
Yes. Okay. Thank you. I will take care that I will not utter the names.
Yeah. Thank you. Thank you. Okay, Miss. This is Redmi Note 8 Pro. I cannot see the name of this gentleman. Yeah. Yes, sir. Hello. Hello.
Hello.
Yes, sir.
अच्छा विक्रांत भिड़े सर पुणे से
जी सर. जी सर.
हाँ सुन रहे ना आप सर?
जी हाँ सुन रहा हूँ सर.
से आपका फॉलोअर हूँ.
जी हाँ सर.
1998 जब आपको मैनुअल निकलता था.
ये फर्स्ट इश्यू जब निकला था आप तब से लेके सब्सक्राइबर है हमारे.
रियली सर.
यस.
और मैं आपका मल्टीबैगर में ये हूँ क्या सब्सक्राइबर.
जी.
बहुत अभी नहीं है नहीं जैसे 20 इसके बाद नहीं पहले से मैं कमाता ही रहा हूँ. और मैं पुणे का आपका जो ये था ना कोई होटल में
यस
अटेंडेड आल्सो. सर मेरा क्वेश्चन अभी ये है कि आपका जो बुक है वो मैंने बेटी को भी मेरे यूएस में भेजा था.
जी.
उसमें जो पी का जो है ना पीजी उसके बारे में मुझे पूछना था. अभी मैं मेरे स्टॉक का भी मैं पीजी कोई 25, 30, 50 तो उसमें सर आप जरा ये बोलो ना कि आप कभी जब भी मैंने इन्हें पढ़ा था आपका तो आप बोल रहे थे कि 0.75 to 2.
यस.
जरा प्लीज.
सर जो पीजी रेशियो जब हमने एक वर्कशॉप किया था आपने बिल्कुल सही बताया कि 0.75 to 1.25 या 1.5 में लिखा था. समथिंग. यस. और नाउ द ये सब एक्चुअली डिपेंड करता है सब ग्रोथ रेट के ऊपर. अगर कंपनी का अर्निंग्स ग्रोथ रेट हाई है तो हम पीजी रेशियो को 2 तक भी ले आ सकते हैं. लेकिन उसके लिए अर्निंग्स ग्रोथ रेट 40% प्लस होना चाहिए तब हम 2 तक ले आ सकते हैं. और आज के जो माहौल है क्योंकि लिक्विडिटी बहुत बढ़ गई है पूरा इंटरनेशनल मार्केट में भी इंडिया में भी तो हमने जो पैग रेशियो है उसका 1 से लेके 1.75% कर दिया है. सॉरी इट इज नॉट परसेंटेज इट इज ए रेशियो. सो फ्रॉम 1 to 1.75. अभी क्या हो गया ये कोविड के कारण जो 2020 के जो रिजल्ट्स है या 2021 के भी जो रिजल्ट्स है और वो जो एक जो कंसिस्टेंट स्टडी ग्रोथ चल रहा था वो पॉसिबल नहीं है किसी भी कंपनी में आप वो नहीं देख पाएंगे. तो जो पीईजी का जो कंसेप्ट है वो आपको एक्स्ट्रापोलेट करना पड़ेगा 2020 से 2021 जो एक्चुअल रिजल्ट्स है उसके ऊपर वो नहीं काम करेगा. तो बेटर होगा कि हम जो प्रूवन कंपनीज हैं सिर्फ उसी में ही पीईजी रेशियो लगाएं. नई टाइप की कंपनीज में नहीं.
क्या पीईजी कंफर्टेबल पीईजी क्या होगा अभी?
यस. सर वो बहुत कॉम्प्लिकेटेड हो जाएगा टॉपिक हमें डिस्कस करना.
कोई बात नहीं.
यस.
मैं आपका सेमिनार भी आई थिंक 2 बरस से जैसे आपने स्टार्ट किया भाई अटेंड करो और आपके थॉट्स इतने क्लियर रहे थे ना, आज तक मुझे बोलने का सवाल ही नहीं आया। क्या बोलूँ आपका। तो मेरा एक क्वेश्चन था, आप मुझे शायद बता सके कि पीजी का मुझे अभी जरा कंफ्यूजन हो रहा है, क्योंकि पीजी सबका बढ़ गया है बहुत ही, तो कहाँ तक मैं कंफर्टेबल रहूंगा, तो मुझे अभी वो पता नहीं चल रहा है सर।
जी।
ओके सर, चलो थैंक यू सर।
थैंक यू सर, आपने आज अटेंड किया, बहुत अच्छा लगा, थैंक यू वेरी मच।
यस थैंक यू सर, थैंक यू।
Yes, Mr. Umesh.
Sir, good evening, sir.
Good evening, welcome.
As usual, it was a wonderful lecture. Now, I have one query. In fact, this was regarding the smart SIP. I don't know, I will not name the company, but this one you had asked to exit at a particular price. But last 3 days, I was out of station. I couldn't do. When I wanted to do yesterday, perhaps it has come a little bit low, almost 20 rupees lower than what you had told in smart SIP to exit.
About 8% lower.
Exactly. Now, what we should do, sir, should we continue to hold it or till the price that you had recommended, or should we exit at whatever price it is there, sir? This is the first time. This is the first time something like this is happening, because each time you recommend, just 5 minutes after that recommendation, I would buy or exit. But only this time, 4 days I was not in station, so this has happened.
Okay, there is nothing unusual kind of thing. When you are a long-term investor, it hardly matters. I will tell you why. Because one thing is there, whenever in SIP, whenever we give you a change of stock, then it is a, so suppose if we have given you to sell a stock worth rupees 50,000, we ask you to buy other stocks worth rupees 50,000. So when the market falls, it cancels. So this time also, I'm very sure the stock which we asked you to sell has come down by 8%, and the stocks which you wanted to buy, of course, they are not down by 8%, but about 2 to 3%. So to that extent, they will nullify. Now the remaining is about 5%. Now 5% spread across 16 stocks. So that will make an impact of hardly 0.3% in your portfolio. So don't get disheartened, and at some other time, it may happen the other way also.
Sure, sir, sure.
It may happen in future that we will ask you to sell and you may not be able to sell for some reason. And after 3-4 days, you will find that the stock is up and you will be benefited.
Yeah. That happened, sir, with one stock in multi-bagger.
Okay.
When you asked us to exit, I couldn't do it.
Okay.
So when I next day exited, it had appreciated quite significantly, sir.
Okay. It happens. So in the long term, it hardly makes any impact. Even if you do it by after 10 years, this will not have any significant impact on your portfolio.
Sure, sir. Sure.
Yeah, sure.
Sure.
Thank you.
Thank you, sir. Thank you very much.
Yes, Mr. Jeet.
A very good evening, sir. You are just absolutely amazing.
Okay.
Every time I watch you, I keep learning something new, and my conviction keeps going up on the stocks you recommend, and also I also do a bit of research, and on that also I apply whatever you teach us through these webinars. And I'm your subscriber. I'm a subscriber of your Smart Gains and Smart Multi-Baggers.
Yes.
And I must say, recently, one stock didn't just go as you expected it to go, and some investors were getting panicky. And you again came up with a very good report about it, that nothing to be panicked about. The company is available at much cheaper rate now. Please add more. And also, I was also thinking about that company few months back, but I didn't have a conviction to add. Since you gave that conviction, I immediately bought it without thinking much. And
sorry.
Yeah, it's okay, sir. The knowledge you share is absolutely priceless, and you are sharing it almost every month, twice, without any charges, is something really big. I mean, I haven't seen any investor or any advisor doing this for free, which is something really big, actually. Hats off to you, a very thank you, and a very, very big pranam to you. You are just
Thank you, Jeet. I don't have the words to say thank you. Thank you is also a small word, the kind of praise you have made. Apart from the advice, what we provide to you, you also need a sort of confidence on the advice. So as long as the stock moves up, you are happy, especially the new subscribers. It happens with everybody, with everyone. It happens with me also. When I was a new, I wanted a source who can provide me the confidence, who can provide me the conviction. But conviction comes on your own. It takes a very long time. So for that period, you need a very strong, I say, a very strong advisor, very strong friend who can keep you updated, who can keep your emotions under check. So that is also, we believe that is our duty, that whenever the investors, whenever we start receiving the queries for a particular stock, suppose I receive 2-3 queries or 4 queries, then I understand there are 10 more subscribers, more than 10 subscribers. So we come out with a write-up, what to be done. And thank you for subscribing to so many products. And I know you are very regular in attending our webinars, whether it is Saturday or Sunday or any day, you will always be there. You make it a point that you have to attend. I know.
I've taken an off from the evening's office.
Oh, I see. So, thank you. Thank you
very much, sir. You are my stock market guru. Thank you very much.
Thank you. Cement industry vis-a-vis rise in coal prices. See, coal prices are rising, of course, and it cannot happen that cement companies will be totally absorbing the coal prices, rising coal prices. If that phenomena is a kind of it becomes a long-term phenomena, then definitely cement companies will raise the prices. Every company tries to protect its margins. That is a very good question. For companies which have a history of consistent earnings, we can be sure of predicting future EPS growth rate and PEG. But if there are erratic earnings for a company, then can we predict EPS? Definitely, you cannot predict. It is very difficult because if a company, yesterday only I was seeing a company whose net profit margin for the last 5 years was moving up and down from 18% to 42%, then back to 22%. What next? I cannot predict. It is very difficult. And why to go about that company only? Because there are 4,000 companies we have at our disposal. We can look for other companies. We have to select only 15, 16 or 18 companies. And I hope there are more than 100 companies which are reporting consistent earnings growth. Of course, there is an exception because of the COVID. We are not taking any PMS. There is a query about taking the PMS. We are not taking any PMS. Your view on realty stock in general and REITs in particular. Realty stocks are already very high. As I said, always think of long term. Of course, there is a strong demand for the houses, but there are only limited realty good stocks. To be precise, there are only 3 good companies, but the valuations of all these 3 are pretty high. So at this juncture, I would not prefer to invest in realty stocks, but I would prefer to invest in companies whose material will be used in the construction of the house, like cement, wood, or artificial wood, you can see, electrical fittings and all those things. Your views on when this correction will end and recovery will start. if I know this correctly, then I will become the richest person very soon. So I do not know when the correction will end. Moreover, what you are saying is correction. Market is down by only 1.5% from the peak. So this is not a correction, I would say. There's only a very small jerk. So with this, we come to the end of the questions from last couple of, whether I should say from last 10, 12 webinars. What I have observed is the number of queries are less. Probably you people know now very well that what our thoughts are, what we have to say. So you don't want to repeat the questions, and we would recommend to come out with new subjects, new topics. And in this regard, I would request all of you to kindly send us your requests on specific topics if you have. And also from next month, we are going to start offline seminars. And the first city which we are going to visit is Ahmedabad. So with this, we come to the end. Thank you very much. Have a good day. Bye-bye.